Hello, and welcome to Need to Know, your weekly investment podcast brought to you by the experts at Coutts. I'm Sarah Muir, and I'm joined as always by David Broomfield. Now, David, at the risk of straining a muscle, jumping on the sport bandwagon, I gather you want to look at, basically how the world's largest sporting event impacts markets. Well, that's part of what we're going to look at.
Yeah, let's look at that. Hi, Sarah. Hi, everybody. Straining a muscle. I didn't come prepared with a whole book of puns, Sarah. Perhaps I should have done my research.
I should have warned you.
Yeah, my motivation for this is somewhat, selfish? I suppose it's I'll choose my words carefully. I don't want to disenfranchise most of the listeners. It's my antipathy towards the football that's made me think more, well, hey, the Olympics is coming. Yeah. And this is a well-trodden pathway talking about the Olympics, but I think there's probably some interesting data points we can look at.
Okay, so how are we going to break that down into three topics?
Yeah, let's look at the financial burden of the Olympics, which is not insignificant. And then the economic impact of the Olympics. That's the market effects and the economic effects. And then I think let's talk a little bit about the role of the IOC, the International Olympic Committee, and its economic influence.
Okay, all right then. Well, let's kick off then with financial burden. It is an expensive business hosting an Olympic Games, isn't it? And it's getting more expensive.
It is unbelievably expensive hosting the Olympics. It's a massive investment. You need at least $10 billion to even entertain the idea of hosting one of these events. And I think let's put that into context with other games, right? So a Summer Olympic Games can go anywhere between 10 and at the top end, $44 billion. Contrast that with a FIFA World Cup. That's probably somewhere between 10 and $15 billion. And then, you've got some absolute bargains, like a Formula One's a mere 200 to 500 million for a Grand Prix. Even a Super Bowl, according to my data, is only somewhere between 500 million and $1 billion. So the Olympics really is the big high-cost ticket event for any city that plans to host it. And I think what's interesting when you start looking at what it costs and what people anticipated it would cost, there's one sort of universal truth with nearly every Olympic Games. It's that expenses always spiral massively out of control. Yeah. And you look at research, right? Lots of academics have looked at this. There's a good study from the University of Oxford that looks at every Olympics from 1960 to 2016. So that's 30, I think, summer and winter games. They all ran over budget at an average of around 172% in real terms. Okay. So it's amazing that we still keep hosting these things collectively and they still go over budget or to the tune of at least 100%, but in some cases 172%. In real terms.
Because when we were talking about this before, you raised a really interesting point about Montreal. They've only just finished paying off the debt that they incurred for hosting the games 40 years ago, haven't they?
Yeah, massive debts are incurred, and obviously there's different ways to finance things. The Montreal one's really interesting. I think they borrowed about 1.6 billion from capital markets. And that took about 30 years to pay off. So that was the 1976 Games, which was over 4 times, I believe, the original estimate, which I think of the $360 million budget that was anticipated. And there's obviously, cities tend to fund these things, from multiple sources. The debt markets are just one. If you break down, say, the recent Tokyo Games, the IOC obviously contribute a small amount, normally around, we'll come to this in a minute, contribute in the case of Tokyo, just over 8%. And then the actual cash flow from the games itself, which is basically the organizing committee, the sponsorships and the ticket sales, the merchandise, all that stuff, that's about just over 2/3 of the financing. And then the rest comes from the government or directly for a transfer payment from taxpayer or from the debt markets. So it can take a long time to pay these things off.
I want to talk to you about sponsorship in a minute, but before I do that, I guess arguably Greece hosting the games, which cost them around $15 billion, did that push them in? Well, that was the start of their economic woes, or probably added to their economic woes, didn't it?
Yeah, I mean, that was the Athens, 2004 Olympics, $15 billion. The cost vastly exceeded the estimates. And yet many academics and those in the market associated that with one of the reasons one of the major reasons that contributed to the Greek debt crisis that followed, well, about 8 years later, just under. You know, every Olympics seems to follow the same pattern. I mean, 2016 Rio, $13.1 billion, $3.5 billion over budget, left the country with substantial amounts of debt. So this, on average, 172% cost overruns, really interesting. There's, as far as I can see in the research, there's sort of 4 reasons why this tends to happen again and again and again. The first one's about, hard deadlines. So these mega projects are often a trade-off between schedule and cost. And if construction costs are too onerous, the project can be delayed. But the Olympics have a hard deadline, right? That opening ceremony. So cities tend to pay whatever it takes to get it done in time. There's very inflexible requirements, because the IOC stipulate quite clearly requirements, but also there's not much you can do to alter, say, a swimming facility. It has to meet the very basic requirements for the game. So, then there's legal agreements. And then also, I think the most interesting point for me is the economic cycle, because cities typically bid on Olympics when they're feeling quite well-to-do, quite flush. But when do you hold the event? Well, in some cases, a decade later, and anything can happen during that period. So the economic cycle, I think that mismatch between when you bid and when you actually have to then build and host the games means a whole host of things can happen.
Yeah. And also, I guess, so one of the biggest sort of financial burdens is the building of venues and the improvement of infrastructure. And I noticed, actually, there's a piece I read, depending on when you're listening to this. Well, you won't be listening to this today, but I saw in the FT, I think Paris has only built 2 new venues, which is way less than previous games. I think if you compare that with the other extreme, I think Beijing built 12 new venues for their games. So, I mean, maybe we're going to start to see games being a little bit more cost efficient. I mean, there's hard deadlines and that's never going to go. And those requirements of the IOC are always going to be in place. But are we going to start seeing perhaps slightly more sustainable games, I wonder, just because of the cost?
Well, I think this is quite interesting if we go back and look at which cities, because, there's been cost overruns nearly on every Olympics, but some cities have managed to recoup those costs and make a success out of the games, versus other cities which haven't. And one of the indicators of whether you'll make an economic success out of the games is how many stadiums you build and how many of these white elephant projects that you undertake. Because by not building many of these stadiums and facilities and improving and utilizing existing ones, puts it in a much better position to make a success out of the games, if history is any indication. I mean, you're right. The vast majority of the expenditure goes into infrastructure, either physical venues to host the games or the things around the games that are required, actual infrastructure like roads, rail, and airports. I mean, the most extreme example, which I think when I looked at the data points is the definitive outlier, is the Sochi Games, the Winter Olympics, that where 85% of that huge budget, absolutely enormous budget, went on things like roads, rail, and airports. But before we talk about what makes a successful games and what just creates an economic burden forevermore, I think remember that even if you fail to win a bid for the Olympics, it still costs you an absolute fortune. I mean, Tokyo, its unsuccessful bid, its first run at it in 2016, cost $150 million. So it's a very expensive hobby, hobby.
Which I guess, well, we're probably going to tackle this perhaps in the third section when we talk about the IOC. But how much of the sponsorship money does a host city actually see? How much are they able to invest that back into these sort of huge budgets?
Yeah, well, the answer is not as much as you might think. Let's go through the detail of the breakdown of that revenue stream from the games in the context of how the IOC have set up that economic model. Let me just come back very quickly, if you don't mind, to the idea of which cities have made a success of this and which cities haven't. I looked down at the last sort of 65 years of games to try and see if there were any patterns. I suppose the Paris one corresponds quite closely to the 84 LA games, which relied heavily on existing sports venues, infrastructure, trying to minimize construction costs. In Los Angeles, they implemented loads of cost-saving measures. They used a lot of corporate sponsorship, and they sold, exclusive television rights.
Yeah, and actually, I just remembered because I was looking through this. Los Angeles is the only game that actually realised a profit, because, as you said, most of the infrastructure required already existed. Yeah, I was going to ask you, do any games make a profit? But Los Angeles is really the only one in recent history.
Los Angeles was the only one I could find demonstrably that did. There's a real focus, obviously, on the public expenditure in many countries, but particularly in the US. I mean, the Denver Games famously relocated, the Winter Olympics famously relocated to Innsbruck on the basis that there wasn't enough political support to use public money to fund the games because of this whole feature of losing money over time hosting a game. So it becomes an economic burden. So Denver kicked the games out and they went to Innsbruck. But in the case of LA, they did make money, and the numbers I've seen suggest around $225 million in profit from the games. Okay. So LA made a success of it. Barcelona 92, that was slightly different. The numbers are a little bit more murky, but the point with Barcelona, which is, although it did build a lot of new facilities, it catapulted Barcelona from a relatively unknown tourist destination to one of the top 3 tourist destinations in Europe. But the one that I think stands out even more than those is Tokyo. Tokyo 1964. And the reason, you've got to think of where Tokyo was back at that time. Okay, it's a very different Tokyo than the city, the global city that you know today. When they won that bid for the 64 games, which was in 1959, Tokyo was still recovering, and by recovering, it was still basically visibly showing the impact of the Second World War. Only a quarter of the city had a flushing toilet. The city's tallest building was 10 stories. So basic infrastructure in Tokyo was just effectively non-existent. And what that Olympics did, and it's not just the financial flows into infrastructure that helped Tokyo, it turned Tokyo into a global destination. It invited foreign investment. I think their slogan was faster, higher, stronger, which is what the Japanese government wanted for Tokyo. And, between 59 and 64, when they hosted the games, they built 10,000 new buildings, 8 overhead expressways, 2 subway lines. And they opened the Shinkansen, the bullet train between Tokyo and Osaka. So, you turned the world's eye onto a city. You funneled money into infrastructure, and you hosted, the first sort of Asian games. And it was, I think that would, for me, stands out. LA, from an accounting perspective, made a success of it. In terms of raw impact, for me, Tokyo is the one that was unlike all others.
So essentially, then, we're saying that if we look back over recent winter and summer games, most of them are way over budget, do not make a profit, with a couple of notable exceptions. I think probably the best you can hope for then is that you're going to get a legacy from the games, which is you're going to attract a lot of visitors, a lot of attention to your city, and you're going to improve tourism. Although I did see that, I think I saw there's an impact study done on the Paris games, and they're predicting that it will definitely benefit Paris. I mean, we'll have to wait for after that, but they're looking at, it could be anything from 5.3 billion euros to 10.7 billion euros improved by tourism.
Yeah, exactly. Let's see. We've got a more scrutiny, I think, on these things now than we've ever had in terms of making sure that politicians and city officials make sure they demonstrate value from these games. So let's hope.
Yeah, and also before we go on to the next one, where we look at the economic and market effects, I guess the other thing is that we should factor in is the ongoing maintenance costs that these cities set themselves up for. What did I see? Sydney Stadium costs £30 million a year, but the Bird's Nest Stadium is £10 million a year in maintenance costs just to keep these huge projects in working order.
You're absolutely right. Avoiding these white elephant construction projects is the art of this, because although architecturally and visually they look spectacular, you're quite right that they need to ultimately, once the games is finished, serve their local communities and their local now host cities. So making sure that a venue is practical for community, youth and schools and things like that is also deeply important.
Okay. All right. So we are an investment podcast. Let's look at the economic and market effects then of hosting a games, aside from the cost of actually bidding and setting them up in the first place.
Let's do that. Every time I see huge numbers being spent, huge public money being spent in the order of billions, the economist in me thinks, well, that must have some inflationary effects. That must that must have a crowding out effect. And you go through the sort of sequence of likely impacts that it might have. But when you go and look at academic research, it's remarkable. There's very little academic evidence to show that spending on an Olympics has an inflationary effect. I mean, there are papers out there that suggest it does, but when I've reviewed them, it's very tenuous, I think. There's some authors, some academics that have suggested that high inflation because of games, countries with high inflation can incentivize governments to invest more in sports development to boost national pride and prestige. But this is at the limit, I think, of credulity and believability. I'm not quite with some of these authors. I think that the effects are not inflationary per se, but it definitely has impacts on the area immediately around where the games are held, and you can see that most acutely in the largest asset class in the world, in property. I mean, we all know. Well, I say we. I mean, I'm sure there's international listeners to the podcast, but anyone who is around London, who was in London for the last sort of couple of decades, will know the kind of urban redevelopment and rejuvenation that happened in East London directly following the 2012 games, and you saw that directly in the property prices, where you saw, I think over the time. So the time directly following, in up to and following the games, you saw property prices in London rising around sort of 2 to 3%. But within a 3-mile radius of the games, you saw property prices rising around 5%. So you run that across the slide rule, and you basically added about £1.4 billion to property value. So there is an economic impact in the immediate vicinity of the games. What about employment? That's you've gone from inflation. Let's go and look at employment. Evidence shows that the benefits are pretty short term, and they're often less significant than they were anticipated. I saw a paper looking at the 2002 Salt Lake City games, estimated to create 700 additional jobs, but that was far fewer than were projected. And most of those jobs, when you decompose that data, were very temporary jobs, short-term contracts to directly support the games. So flip it on its head. Does the Olympics help unemployment? The answer is probably not.
Short term, but not longer term.
Short term, but not longer term. You're quite right. But I've touched on this point already a couple of times. There is one effect that does seem to come through, and you've talked about it, I've talked about it, and that's tourism. And the effect of tourism very much depends on whether the host city was already a major tourist destination or not. So the impact of tourism can be mixed, but Barcelona, as I discussed, saw a massive boost. It went from the 11th most visited city to a top 3 destination. Well, in fact, it went to 6, and then it went into top 3. And remember, it's not quite that straightforward, because you tend to only go on a finite number of holidays a year, unless you're very lucky. So if you're going to Barcelona, you're not going to somewhere else. So when you actually look at studies that look at the effect across cities in a country or in a region, not all cities get that boost. You tend to, rob from Peter to pay Paul, so to speak. So, you've definitely got a positive impact, but it's different. It decomposes into quite local, quite micro effects, is what I'd say.
I did see somewhere that London actually saw fewer international visitors the year they hosted the games. I'm guessing, this is very unscientific, but I'm guessing it's probably if you were coming from abroad, you'd go, oh God, I'm not going to go to London this summer because it's going to be mad, or I can't get a hotel because everything's booked up because everybody's, already all the Airbnbs and hotels are already booked up. So I can't come.
There is some of that. There's a little bit of a crowding out effect, and then there's a behavioural effect where you have people just put off. Domestic tourists think I won't visit London for the next month because of exactly what you just described, and other non-Olympics tourism tends to divert to other regions. So you can see that effect measurable in the data from those academics that study it. Should we come on to the market? The actual I was going to say, financial markets.
So we said it can have an impact on property prices, especially property surrounding the Olympic sites. There'll be probably only a temporary uplift of employment. And there's definitely going to be infrastructure benefits if, sort of public transport systems are improved. But yeah, what about markets then? How does hosting an Olympic Games, what does it do to your market, to your stock market?
So there's several research studies and articles that look at the effects of hosting or even actually postponing the games and what effect that has on markets as well, because we saw that obviously in the COVID year with Tokyo. And if you look, first of all, at market reactions to the announcement of hosting an Olympics, you find a significant effect, a positive announcement effect. And I say significant, that's statistically speaking. So you get, according to the studies that I've seen, a 2% cumulative abnormal return for countries hosting Summer Olympics within days of the announcement. So you get this sort of feel-good effect in markets in the days directly following the announcement. But then when you look at what happens directly afterwards, again, that result, that effect seems to evaporate relatively quickly. No similar effect for Winter Olympics.
Is that because it's just not as big and it doesn't have the broad appeal that the Summer Games have?
Perhaps. The studies that I saw that highlights the positive return for Summer Olympics says there is no effect for Winter Olympics. But then there was another study showing that actually the Winter Olympics announcement had a negative effect. So, look, if we just step back, the big picture here is that it's a very short-term, immediate feel-good factor boost to sentiment. You look at it over the months then that follow that announcement, that effect evaporates pretty quickly. I think what the study that stood out the most, which I absolutely love, it's one of the best ones I've read recently, is looking at market trading volumes during an Olympic Games.
Yeah, this is fascinating.
I think it's brilliant. It suggests that it was the University of East Anglia that looked at this. They looked at how Olympic medal wins affect stock market trading volumes. Yeah. And what they see is that trading volumes tend to decrease as a country wins more gold medals, which is interesting. And they cite, they looked at some US Olympics and they looked at trading volume on the S&P 500, and they saw that for each gold medal that was won by the US, trading volumes decreased or by almost 3% the following day. Yeah. Look, market returns, which is sort of, it's what we're interested in here, basically unaffected, but the volumes, there seems to be this quirky statistical effect. Now, the researchers speculate why this might be, but the conclusion seems to be that the Olympics distract investors. Simple as that. And particularly when more gold medals are being won. So it distracts investors attention rather than sentiment, I'd say.
We're all watching it on the TV in the office when we should be doing our job. And I noticed, because you talked about the US, and I saw that their figure was even higher for Germany and South Korea. So every time Germany wins a medal, there you see a fall in trading of 6.7%. I think South Korea was 7.3%.
Exactly. So one to bear in mind. We'll see if it holds true for Paris this year, shall we? I did mention one of the other interesting things that I came across, which was the effect of postponing the Olympics. Okay, that was
Tokyo.
It was a unique circumstance, COVID-19. But when the study looks at Olympic sponsor stock prices, okay, and you can see there was definitely a negative effect to the initial news of the cancellation, and those same sponsor stocks reacted more positively to postponement rather than cancellation. And I think that positive reaction that you got from the announcement that it was being postponed and not cancelled didn't offset the earlier drop that those same stocks received. So you can see that there is firm specific impact on the downside when these events get cancelled. But when they look at it on the upside, like for events that just run their course as normal, again, no real discernible effect. I'm not trying to talk people out of sponsoring the Olympics, but it doesn't seem to be a huge effect.
I mean, the challenge is I did read, and I can't remember who it was now. Is it? I won't name the sponsor because I've forgotten which one it was. But I think Paris is going to be their last games because they're just not seeing the return on investment anymore, because you don't get that global television audience for the games that you would have got 15, 20 years ago, because people are watching things on their mobile phone. They're not sitting around the TV watching the 100 meters final anymore.
Yeah, well, this is what led me into thinking of the topic for this podcast. I was watching one of the European Cup games from out of the corner of my eye with a degree of antipathy, as I said right at the beginning. But one of the sponsors was the world's largest electric car company that you've never heard of.
We've heard of them because we talked about them on a previous episode of Need to Know. We
have talked about BYD, yes, and that sponsorship was shining off one of the LED screens at the side of the pitch on the same day that the G7 communique came out announcing tariffs on imported electric vehicles from China. So it made me think about the economics of sponsorship. So I mean, let's see what effect Paris has.
Yeah. So if anybody wants to read that research, it was conducted by the University of East Anglia and Nottingham-Trent in 2020. And that was looking at the sort of impact of medal success on trading volumes. And that was Rafael Markellos and Dr. Jessica Wang. And that was published in the European Journal of Finance. So go and have a look at that. It is really interesting. It's very entertaining reading. Okay, so getting sort of markets respond positively to the announcement that you've won the games, but it's short-lived. There isn't really an impact on sort of markets overall, but we do see trading volumes impacted by every gold medal win in its home country, but it doesn't actually impact returns. So we're not suggesting this as a investment strategy. Don't be sort of watching the results and sort of shifting your money around because you see that USA is leading the medals table, or China, or whoever. We'd never suggest such a crazy strategy as that. Okay, so then, well, because I asked you before, and I said we'll come back to this in the last bit, which is the sort of the role of the commercial model of the Olympics, because somebody does benefit from this, and how much of the sponsorship money, which is very important, actually goes to the host city. So that's our kind of final bit, isn't it?
Yeah, exactly. So yeah, you're quite right. As an investment strategy, it's not one that is reliable or one that you could even find any evidence to support. But to flip it around, not looking away from individual investors to, if you're a city thinking of investing in the games, well, what's the financial model for doing that? So right at the beginning, you asked me a little bit about the revenue model. And it really falls into sort of 5 categories. And the biggest one is broadcasting rights and sponsorship. And that amounts for anywhere between 72 and 75% of the revenue of the games. Ticket sales around 10% of the games, and then the other two categories, licensing and merchandise, and then there's the catch-all other sources make up the rest. So it's really about broadcasting rights and sponsorship. Yeah. And I think the financial model of the games is quite interesting, because effectively the organizers of the games, the IOC, transfer that risk of executing a game and having to pay for a game off their balance sheet onto the city that hosts it. But it is a relatively lucrative financial business. If you looked at the IOC as a company, it would be about $7 billion in revenue. So it puts it roughly in the same ballpark as, let's say, in the UK, Compass Group. It's a relatively big company. And there's plenty of academic studies that have looked at the financial model of the IOC. It's come under a lot of scrutiny in recent years. And as I already noted, it's host cities that take on the bulk of the financial costs of the games. And the IOC captures obviously all that revenue from broadcasting rights and sponsorships, but there is this imbalance between that revenue capture and then the contribution to the city for the costs of running the games. And that's something that's universally apparent in the academic research. And that sort of mismatch of risk and reward. I mean, the IOC generates about $5.2 billion per game cycle, so per 4 years. And that's looking at data from 1992 to 2016. And it's broadcasting rights, as I said, it's sponsorship, and then it retains profit of around 3.4 billion per Olympic cycle. So, you just have to look at the financial statement of the IOC. You can see its cash reserves grew from 100 million in 1985 to over $1 billion in 2016. So I think that's where the debate now is. The debate's like, well, who's actually carrying the risk here for executing and hosting the games? And I think, given that the IOC distributes around 10% of revenue to international federations and national Olympic committees, I think people are now starting to suggest that number should increase. So I suppose the only other thing I would add here is that it's that infrastructure cost that really really differentiates between those games that are success, those games that aren't. And I think that if you're going to make a success out of the games, you've got to try and minimize that within reason, while still meeting the IOC's minimum requirements.
Yeah, because the expectation is there'll be a temporary uplift when the announcement is made that you've won the games. There's a potential boost to tourism when the games are being run. There's a potential benefit to your economy because of improvements to infrastructure and an uptick in property prices. But they're not going to get long-term employment off the back of the games. It's about the feel-good value. The impact on your stock market is pretty much zero, essentially. You might get a bit less trading volume, but it's not going to have an impact on returns. So essentially, I guess it'd be interesting to see if Paris is a good model, because they've obviously seriously scaled back infrastructure spending. And I know I've seen a few cases being put for the Olympic Games should actually just, if fewer countries want to host the games, maybe we should get to a point where we just have the games hosted in one country and there's just one permanent home of the Olympic Games. And maybe that is Switzerland, if it's the home of the IOC, or I'm not sure Greece would want to host the Olympic Games every 4 years. That might be a bit beyond their budget. But I mean, that's possibly the argument, isn't it?
Yeah, look, that's exactly what I was about to say. I mean, there's plenty of models out there, whether it's, if you're, the international financial institutions and the multilateral institutions have found their homes in in Washington and New York, in Geneva, for various reasons of history. But there is a great economy of scale there. There's network effects. And it is an interesting way, I think, of organizing the games. Obviously, it comes down. I'm approaching this like an analyst, like an economist. I mean, there is just the positive externality of hosting a game and feeling great about your country and the sense of national pride. it just comes down really to transparency and the political will to host a game. Obviously, trying to make money out of the games is perhaps not how you should ever enter into a decision to host a games. But breaking even, I think, is a worthwhile aspiration. Yeah. Losing money and giant white elephant projects is what everyone's obviously trying to avoid. So maybe we'll get to a permanent host and a permanent location, or maybe we'll just look at the oversight, the transparency, and the revenue side in more detail. I don't know.
And definitely, if the research conducted by the University of East Anglia, Nottingham Trent, tells us anything, don't use it as an investment strategy.
Definitely not.
Don't build your portfolio around who's hosting the Olympic Games. Thank you very much, David. A reminder that the views expressed in this podcast are not intended to constitute investment advice, are accurate at the time of recording, and are subject to change. Thank you for listening. To make sure you never miss an episode, make sure you subscribe to Need to Know across whatever platform you use to access your podcasts. You'll find previous episodes, including one I recorded with Simon Kidston, where he shared his views on investing in classic cars, and we did another one recently with Kitty O'Shea, where we looked at the London prime property market. We'll be back next week with more Need to Know. Until then, bye for now.